Welcome to Hibiscus Petroleum's Financial Results webcast. This webcast presents an overview of the results reported as part of our quarterly financial report for the 3-month period ended 31st March 2022 and released earlier today. This webcast has been prepared by Hibiscus Petroleum Berhad or the company solely for general information purposes and shall at all times be heard and or viewed together with the full quarterly report for the same period that has been made available or published by the company on its website. This webcast may contain forward-looking statements which are based on current expectations, beliefs, and projections about future events or matters. By listening to and or viewing the webcast, you agree to limitations and notifications set out in the disclaimer section of this webcast. Our presentation today is split into 4 parts. Part 1 covers the group's quarterly financial and operational highlights, which will be presented by Yip Chi Yong, or CY, our Chief Financial Officer. Part 2 of our presentation provides a brief outlook on the oil market, which will be presented by Deepak Thakur, our VP of Economics and Business Planning. Part 3 covers the group's financial results, which will be presented, again, by CY. Lastly, Part 4 is a summary of our key messages for this quarter, which will be presented by Pascal Hoss, CEO of Peninsula Hibiscus Sdn Bhd. Should you have any queries, you may contact our Investor Relations team headed by Lily Ling, our Senior General Manager of Corporate Development, via the email address provided at the end of this presentation. I'll now hand over to CY.
Hi, I'm CY, Hibiscus Petroleum Group's Chief Financial Officer. I'll now take you through an overview of the financial and operational highlights for the current quarter. Hibiscus Petroleum completed the acquisition of the entire equity interest in Fortuna International Petroleum Corporation, or FIPC, from the Repsol Group on 24th January 2022. FIPC, through its wholly owned subsidiaries, owns operated participating interests in 5 production sharing contracts, namely the 2012 Kinabalu Oil PSC, the PM3 CAA PSC, the PM305 PSC, the PM314 PSC, and the Block 46 PSC Kainok. Our group has assumed Repsol's operatorship in all these 5 PSCs. The financial performance of the group in the current quarter has been boosted significantly by this acquisition. During the quarter, out of the total earnings before interest, taxes, depreciation, and amortization, or EBITDA of 434.7 million ringgit, and profit after taxation, or PAT, of 307.5 million ringgit, the newly acquired assets contributed 390.1 million ringgit and 334.9 million ringgit to the group's EBITDA and PAT respectively. This includes a negative goodwill component from business combination of 317.3 million ringgit, signifying that the fair value of the acquired assets was greater than the final purchase consideration. This quarter ended 31st March 2022 represents the first quarter that the financial impact of the newly acquired assets are included in the group's financial statements. For the period between 25th January 2022 to 31st March 2022 of the total group revenue of 297.1 million ringgit, the FIPC group contributed a revenue of 124.8 million ringgit and the PAT generated from operations amounted to 17.6 million ringgit. The timing of oil and condensate offtakes from these assets conducted just prior to the completion of the transaction in January 2022 contributed to a relatively low revenue and profit numbers, but as will be demonstrated on a later slide, the assets have performed to expectations from a production perspective, and the group is in a position to close the 2022 financial year strongly. In addition to this, the healthy oil price and gas price levels have contributed positively to the profitability levels in both North Sabah and the Anasuria cluster. The group's revenue increased by 4.5% compared to the previous quarter as we saw higher realized oil prices achieved across all assets. The group's EBITDA and PAT grew by 211% and 534% respectively compared to the previous quarter. These results are on the back of a negative goodwill component arising from a business combination of the FIPC assets with our existing business portfolio. Against this positive impact of negative goodwill, the group also took up an impairment of its intangible assets in Australia amounting to 44.9 million ringgit. Following this impairment, Australia's remaining carrying value stands at 2 million ringgit. The group believes that with the completion of the FIPC acquisition, the profile of the group's oil and gas portfolio is now dominated by producing assets primarily located in Southeast Asia and to a lesser degree in the United Kingdom. Material, financial and human resources are being applied to these producing assets, which will likely result in less resources being applied towards the Australian assets, and thus this impairment seems appropriate. We are also pleased to report that the new assets have pushed the group's production to approximately 20,000 barrels of oil equivalent per day, nearly tripling previously delivered production levels. Given deliveries of oil and gas made to date, and planned offtakes and sales of gas for the month of June 2022, we are expecting to sell a total of 4.6 million barrels of oil equivalent of oil, condensate and gas for the financial year ending 30th June 2022. The fair value of the newly acquired assets as at 24th January 2022 has been finalized and reviewed in accordance with the provisions of MFRS 3, accounting for business combinations. All identifiable assets and liabilities of the FIPC group as at 24th January 2022 were included in the assessment, and the resulting outcome has been independently reviewed by a third-party expert. This work resulted in a fair value gain, referred to in the quarterly report as a negative goodwill from business combination, of 317.3 million ringgit as at 31st March 2022. The computation of the negative goodwill amount is detailed on this slide. As a reminder, negative goodwill is an accounting principle that occurs when the price paid for an asset is assessed to be lower than its fair value in the market. Given this outcome, we are pleased that the company has negotiated a transaction that is delivering enhanced value to our shareholders. Whilst MFRS 3 allows a 1-year period from the completion date for the allocation of the purchase price to be finalized to determine the fair values of acquired identifiable assets and liabilities, we do not expect to make any further adjustments in this area. This table shows the operational performance on both the North Sabah and Anasuria cluster assets for the current quarter. Figures from our newly acquired assets are also included. However, the figures shown are for February and March only, as the acquisition was completed at the end of January. Focusing on the current quarter ended 31st March 2022, the North Sabah production facilities recorded an average uptime of 87%. The group is currently catching up on non-critical maintenance activities deferred during the COVID pandemic, and whilst this metric is currently low, it will gradually improve over the calendar year. Average daily net oil production for the current quarter stood at approximately 4,700 barrels, with an average OPEX of $12.89 per barrel. Approximately 300,000 barrels of crude oil, net to sea Hibiscus, was sold at an average realized price of $89.58 per barrel. This is a price that is higher than that secured in the previous quarter. In terms of expenditure, costs related to specialized studies, production maintenance, and support services during the current quarter resulted in a capital expenditure of 2 million ringgit net to sea Hibiscus. Over at Anasuria, the average uptime achieved in the current quarter was 68%, whilst the average daily net oil and gas production stood at approximately 2,000 barrels of oil equivalent, with an average OPEX of $25.34 per barrel of oil equivalent. Anasuria's operational performance for the current quarter continues to be affected by the unavailability of a critical component of the subsea infrastructure which malfunctioned in May 2021. This critical component is found in the production riser that transports produced crude oil to the Anasuria FPSO. Currently, this component is isolated from the primary production system. Until the failed component is replaced and the production riser returns to normal service, we anticipate that offtake volumes and OPEX per barrel of oil equivalent will be affected. Engineering and procurement activities are currently ongoing on a fast-track basis, with execution expected to be concluded in the last quarter of calendar year 2022. In addition, the planned well intervention program carried out at the Gillimore A field in March 2022 caused a shutdown of some of the production from the field, which consequently had an adverse impact on the month's production volumes. In terms of capital expenditure, Anasuria Hibiscus UK has incurred approximately 21.3 million ringgit in the current quarter, primarily for the well intervention program in Gillimore A field and the ongoing riser reinstatement project. On a positive note, the average realized gas price secured for Anasuria gas continues to be strong as a result of gas supply shortages being experienced in Europe as a result of the Russian invasion of the Ukraine. For our newly acquired assets, the average uptime achieved was 92%, with daily net oil and gas production at approximately 13,000 barrels of oil equivalent, with an average OPEX of $11.93 per barrel of oil equivalent. At PM3 CAA, costs involved with the H4 drilling and project development and production maintenance resulted in a capital expenditure of 32.4 million ringgit. This table shows the latest estimate of the group's crude oil and condensate offtake schedule and gas sales from our producing assets for the financial quarter and financial year ending 30th June 2022. For the 9-month financial period ended 31st March 2022, we have sold a total of 2.6 million barrels of oil equivalent, comprising oil, condensate, and gas net to the group. As can be seen on the slide, the closing quarter of financial year 2022 promises to be very strong as we expect to sell a further 2 million barrels of oil equivalent in addition to the 2.6 million barrels of oil equivalent which has been already delivered as of the end of the current quarter. I will now pass on to Deepak.
Hello, I am Deepak Thakur, VP of Economics and Business Planning. Moving on to part 2 of our presentation today, I will now provide a brief outlook on the oil market. This chart from Rystad Energy shows the outlook for liquid balances having a slightly tighter profile than the crude market, as end consumption products such as gasoline, diesel, and jet fuel were hit more immediately as a result of COVID-19 lockdowns and lower domestic demand in Russia. Their liquid balances forecast is set to tighten towards the middle of 2022 as they expect a delayed Russian supply shock paired with consumption ticking up over the high summer travel and cooling season. Brent oil prices have hit levels not seen in over 8 years, partly due to the Russian invasion of Ukraine, exacerbating the lack of supply matching demand as the world opens their economies. This chart here shows Rystad Energy's oil price outlook under their base, bull, and bear cases. In the analysis, they foresee seasonal demand growth materializing in the summer, which would further widen the supply gap, which could be worsened by unplanned outages not yet accounted for in a Rystad supply base case. What this graph from Rystad shows is that in the Brent base case, crude oil prices are expected to remain above $100 per barrel for the rest of the 2022 calendar year. I will now hand over back to CY, who will go over the financial highlights.
Hello again. Our growing enhanced financial stability has once again allowed the group to reward its loyal shareholders. As you would recall, for the previous financial year ended 30th June 2021, the group paid total single-tier dividends of 1.5 cent per ordinary share. That was the first time Hibiscus Petroleum paid a dividend since it got listed in 2011. I'm pleased to state that on 25th May 2022, the group has announced the declaration of an interim single-tier dividend of 1 cent per ordinary share for the current financial year ending 30th June 2022. As often reiterated in the past, we practice careful management of costs and the efficient delivery of production enhancement projects. This continues to be our strategy of maintaining a low unit production cost structure in our producing assets. Timing of implementation activities is critical in ensuring that positive cash flow is consistently delivered. The group operates or jointly operates its main producing assets, which is a key enabler in allowing us to manage the timing of implementation activities, aiding in the control phasing of expenditure. The charts on this slide show the quarterly average realized oil price, unit production costs, and EBITDA margins for both the Anasura cluster and North Sabah over the last 10 quarters, and for the newly acquired assets in the FIPC group over the current quarter. It must be noted that the EBITDA margin for these new assets in the current quarter have been adjusted to exclude the negative goodwill of 317 million ringgit. As shown in the charts, the average unit production costs for the Anasura cluster, North Sabah, and the new assets are all well below the average realized oil price achieved in the respective quarters. I wish to stress that whilst profits are extremely important, management's focus remains on delivering a strong and consistent EBITDA. The group's financial performance and profitability in the current quarter was strong on the back of high oil, condensate, and gas prices, and a negative goodwill recognized. During the current quarter, EBITDA attained was 434.7 million ringgit. The group's PAT in the current quarter was 307.5 million ringgit. As mentioned earlier, following the completion of the acquisition of FIPC Group, a one-off gain in the form of negative goodwill from the newly acquired assets amounting to 317.3 million ringgit was recognized in the current quarter. Another material one-off entry in this current quarter was the 44.9 million ringgit provision for impairment related to the group's Australian assets. As previously mentioned, the remaining carrying value of our Australian assets now stands at 2 million ringgit. In the current quarter, the group sold approximately 472,000 barrels of crude oil from our assets. The North Sabah asset delivered 300,000 barrels of crude oil net to Hibiscus, was sold at an average oil price of $89.58 per barrel. There was only one offtake in the current quarter instead of the customary two offtakes in a quarter for this segment. Despite only one offtake, the relatively high average realized oil price achieved, coupled with careful management of costs and efficient operational performance, resulted in an EBITDA margin attained in the current quarter of 42.5% for North Sabah. From the United Kingdom segment, 74,000 barrels were sold from the Anasura cluster at $122.28 per barrel. In addition, gas sales delivered a revenue of 19.4 million ringgit. Gross profit and EBITDA for this segment amounted to 66.1 million ringgit and 48.9 million ringgit respectively. This included profits generated from the 90,000 barrels that were overlift, as reported in the previous quarter of 27.1 million ringgit. Gas revenue from PM3CAA achieved in the current quarter was 74.6 million ringgit. In addition, crude oil sold from the newly acquired assets in the current quarter consists of 90,000 barrels from the PM3CAA PSC and 7,700 barrels of crude oil from the Kinabalu and others segment. The crude oil offtake from PM3CAA was sold at $123.69 per barrel, while $114.13 per barrel was realized for the offtakes in Kinabalu and others. In summary, total revenue generated across all our assets in the current quarter amounted to 297.1 million ringgit. That's all from me today. Before we conclude, we have Pascal with our key messages.
Hello, I am Pascal Hos, CEO of Peninsula Hibiscus and Irian Berhad. And here are our key messages for the current quarter. The group's recent acquisition has begun to bear fruit, which is reflected in our operational results. Our financial performance in the current quarter has been positively affected by smooth operational performance combined with higher oil prices, as well as being boosted by the completion of the FIPC acquisition. In the current quarter, we sold approximately 472,000 barrels of oil and 2,700 million standard cubic feet of gas. It is important to note that whilst we have delivered about 2.6 million barrels of oil equivalent to date, we expect to deliver a total of approximately 4.6 million barrels of oil equivalent for financial year 2022 from our producing assets. Daily production rates have also increased to approximately 20,000 barrels of oil equivalent per day. Additionally, an interim single-tier dividend of 1 cent per share was announced on 25th May 2022. Overall, the recent acquisition has positively impacted the scale and profile of the group, providing us an even stronger platform to pursue future growth opportunities. That's all from me. Back to you, Andrew.
Thank you, Pascal. And that is all we have for this quarter's earnings webcast. Thank you for tuning in.